This is Morning Stock Watch with the weekly market report for the week ending July 10th, 2020. This report includes the broad market, market sectors, and Tesla, starting with the S&P 500 ETF, SPY, weekly closing price of $317.59, up about 2% since last week. Looking at the weekly chart of SPY, we can see the chart is presenting a look of potentially changing price behavior. This week, price closed higher than the previous 3 weeks and continuing to trade above all moving averages. Things are still bullish at this point, while the week's candle is a hangman, which is just a hammer candle at the top of a trend or a consolidation such as this one. These are many times considered to be bearish depending on its volume and its location in the chart. Weekly support and resistance of the breakdown candle from the week beginning February 24th. That price zone can be seen here, and we can see that price is still inside of that zone. In general, we're looking for a price break above or below this zone. This week's candle is a very narrow spread in comparison to the previous 2 weeks with slightly more volume than last week. Also on the weekly chart, we have a somewhat strong resistance with this line here. Price closed at or below this level, which is around 319 or so. On the daily chart, price action resembles a descending triangle with major support at 300 and minor support at 310. The last few candles have bottom wicks, with average volume being bought up from 300 as well as support from the moving averages below. The moving averages are presenting a lot of strength from below and could more likely create an upside breakout on average or high volume. Looking at the 11 market sector ETFs and simply looking at the weekly candles in comparison with the S&P 500, the market continues to have a bullish tone during this consolidation period, with tech, communications, and consumer discretionary leading the way. The Nasdaq made of many tech stocks have been very bullish the past 2 weeks. Increasing volume and large green candles say that tech will want higher prices next week, but it's getting closer to an important level. Will that be enough to bring the market up to its price target? Now let's take a bit closer and look and see where the S&P may actually be going. As always, there's 2 sides to every trade, and the idea is to be on the good side of the trade more times than not, with each trade having limited risk. So let's see where this thing can go. To the weekly chart of the SPY, starting here at this red candle, price had overnight gap ups through the moving averages for a couple days on decreasing volume, eventually bringing price above lots of weekly resistance and back into the breakdown candle zone. This gave price the chance to run straight to 323, the opening price of this breakdown candle. Price level is marked off here. Since then, there's been lots of choppy consolidation due to this breakdown candle, and a new trend resistance has been established with this line right here. This week we have a hammer that closed just below that resistance with increased volume from last week. It's hard to say for sure which way next week will go, but whichever way it does, price will make its way to support if it comes down and resistance if it goes up. For a break above this resistance, it would be preferable for price to close consistently above 312.15, last week's close. If resistance managed to be taken out, we'll definitely see 323 again and likely higher prices. There's almost just as high of a chance price will revisit support down at 310 and possibly 300. And we only have Tesla for today, weekly close of $1,544.65, up about 21% on the week. Tesla again at all-time highs, breaking all the rules and continuing higher and higher. The weekly candle is strong with very high volume. Going back to the lows of the pandemic in March, we have very high volume, textbook hammer candle. That was a very good indication of changing price behavior at the bottom. Saw a point where it was close to breaking out, but fell due to lack of volume, and another fail. This could have been interpreted as a reversal candle, but it was saved at 700. This creates an up channel. Then price made weekly narrow spread gap ups for the next 8 or so candles along support until price finally made it above previous all-time highs. When that happened, the next candle fills up the entire channel on a breakout attempt. And then this week price ran up another 21%. Amazing. There are hints that price wants even higher. But at this point, everybody wants a piece of Tesla, and to chase it now would be very dangerous. There are no levels to watch out for the upside. On the downside, we do have the top of the channel that would be possibly good to get in around $1,250, and then $1,120, and then also at around $1,000. Tesla can move fast. On the upside, honestly, this thing can run to 2,000, 3,000, who knows? Whatever you do, don't chase this one. There will be more of these as long as the markets are around. If you found this report useful in any way, please give a like and subscribe. Thanks for watching, and hope to see you again next week for another weekly report.